have been a lot of things to say about the crypto space, and as you can see by the title and the thumbnail, which mighty exchange will take the fall and cause maximum pain to the crypto space so we can then find bottom and then begin our trajectory to recovery. Now, it's easier said than done. This is obviously something that will take place over a long period of time, but this is why I'm here. I'm always following the news. I'm always following what is going on in the crypto space. If that is something you can agree with, you can vibe to, go ahead and check my socials in the description below so you can stay up to date with the most recent news in the crypto space, just to make it a little bit less confusing. As you can see on my Twitter page, I shared a clip of Charles Hoskinson at the Agriculture in Congress in the Future of Blockchain Technology speech, and it was well worth it. I definitely advise you guys to check out that video. Let's get to the topic at hand. Celsius, the lesser of the evils, repays 10 million DAI tokens to Compound. If you haven't checked out my last video, go ahead. I basically gave the foundation of what was going on and why Celsius has closed their doors to transactions, along with a couple other exchanges that are limiting their transactions as well due to insolvency. People have lost trust in these exchanges and they have been trying to pull out their funds, which the exchanges will not allow them to do. So let's dive into the road to recovery for the Celsius exchange. As you can see here, like the title suggested, Celsius has spent $10 million worth of DAI stablecoin to Compound Finance, a popular interest-yielding DeFi service. So that basically shows you what they have been doing with the funds that are in the exchange. They take that, they make more interest on it, and then they pay that out to the customers, which brings in more risk than what is really necessary. They're into DeFi, and it's just not worth it, especially when you have a so-called stand-up exchange and your motto is to unbank yourself. But if you put yourself in a position where you can possibly get liquidated due to all the loans and the contracts you have borrowed out, you're just putting yourself and the customers of your exchange in unnecessary risk. Now, reading on to the next paragraph, you can see with that payout of 10 million to close out their loan with Compound, they have received 166 Compound, and that is of recent price. So back when they actually took that loan out, that 166 Compound was worth way more. Not good news. But that's not all. Celsius has also made a number of other repayments over the week as well, in a series of transactions that they paid out $53.6 million worth of DAI to its vault with Oasis Protocol, which is another yield-bearing platform. So as you can see right here, they're involved with two very risky DeFi platforms that have really just gone south. And it looks like they didn't plan or prepare for this kind of volatility, which the crypto space is known for. So it's really hard to understand why they didn't account for this kind of volatility. And finishing off with the last paragraph, this only makes up a small fraction of Celsius activity. They have been scrambling left and right, hiring restructuring lawyers and auditors to make sure that they try to bring under control this uncontrollable vessel that they have created. And I'm rooting for them. I really am. They have taken the trust of their customers and basically squashed it. Their motto is unbank yourself, take charge of your own funds. But now we're in a position where they have held customers' funds captive and you cannot withdraw due to the amount of risk that they decided to take. But on the other hand, they are the lesser of the evils. We talked about Three Arrows Capital last week, and I'm basically done with this article. I just wanted to bring an update to show people that they are trying to remain solvent and be able to return customers' funds and open up transactions so people can withdraw their funds, which I assume they're going to do. They have lost all trust, including me. I had a few funds on there just to passively get some income, and yeah, if they open that up, I am withdrawing with the quickness. Let's move on. Next up, Voyager enters into $500 million loan agreement with Alameda amid Three Arrows Capital exposure. And remember, I could not confirm whether Three Arrows Capital was liquidated for the amount of money that they had in outstanding loans, but it looks like here that the rumor in the news was true. So Voyager took such a hit from Three Arrows Capital. They borrowed so much money from Voyager that they, in turn, needed to borrow $500 million from Alameda due to Three Arrows Capital basically collapsing on themselves. And it's the same story. It looks like they took on too much risk. They didn't account for the volatility in the crypto space, and here we are. The famous investor Kevin O'Leary called for this. Somebody needs to pay. There was just too much leverage in the crypto space, and rightfully so. I can see it every day. I look at the charts. I show you guys some of the charts that are really popular to me sometimes, which is the exchange reserves and the short-term holder cost basis. But when I also look what the liquidations are per day, per week, or whatever range I choose, I just see millions of dollars liquidated left and right because there's just too much leverage. People are taking too much risk. And there's not much to this article. I just wanted to point out Voyager also noted that the company might issue a notice of default to Three Arrows Capital if they fail to pay its loans from Voyager. The firm revealed that the Three Arrows Capital owes Voyager 15,250 Bitcoin and 350 million USD coin, and noted that they have sent requests for repayments to Three Arrows Capital. So it's not looking good. Somebody has to pay for all of the leverage and the loans, and it's crazy. That's all I have for this article. Let's move on. Here we go. BlockFi raises rates 3 days after FTX bailout. Now, I don't know how serious this was, as we can obviously see some of these exchanges are really hurting due to the amount of leverage that they have out there and the amount of loans that they've taken out. And now with the crypto space significantly lower than it was when the loans were taken out, some people are trying way too late to try to rebound and repay back these loans. So the company claims the raise was made possible by strong risk management. They borrowed money to basically just strengthen their balance sheet. So they're not hurting, but they said they could use some more money to build that cushion and, get a little bit more comfortable just in case Bitcoin or the wider cryptocurrency space decides to slump a bit lower. Also within this article too, I think it was this article, or maybe it was another one. If it's not in here, then I'll put it up on the screen. FTX also sent money to Voyager, which, as you can see, Voyager was mixed in this little party right here with Three Arrows Capital. So Voyager also entered into a loan agreement with FTX. Crazy, right?